Welcome to the Advanced Course Remastered, Lesson 1, Valleys and Peaks. In the beginner's course, we created the perfect foundation. We took all the core mechanics of day trading and put them into a system that works for you to continue your journey as a professional day trader. In the advanced course, we are going to get into more complex concepts and dive deeper into some of these theories that will help you continuously add tools to your day trading belt. In this lesson, we're going to be talking about valleys and peaks. Now, valleys and peaks, as they sound, look like V-shaped patterns on your chart. A valley is a V-shape that way, and a peak is kind of like a mountaintop, a reverse V-shape or an upside down V. So these are called valleys and peaks. They're the combination of levels that create kind of this duality, where you would have multiple supports or multiple resistances, swing highs and swing lows, kind of all combined to make an even stronger level. So on the charts, these are known as valleys and peaks. Now, what I find very interesting about valleys and peaks is they're kind of the combination of many things happening at once. If you were to think of the swing high or the swing low of a move, well, that would be the start of either a valley or a peak. If it was a swing high of a move and it went down and then back up, well, that would be a valley. If it was a swing low of a move and then it went up and back down, well, that would be a peak. But interestingly enough, the creation points of these are from the highs and lows of moves. So it's kind of this combination level where you are combining highs and lows along with these different moments in the chart to create valleys or to create kind of the top level or the bottom level. Really, it's nothing but marking the top of support or the bottom of resistance, but you're doing it in a different way. So as you would mark the top of a move prior, what you would say is, here's the top of a move. I'm going to mark this as a level as the swing high. Now I need to break above that. Well, what you're actually doing is you're creating a valley when you break over that. That swing high of the move that was resistance is actually creating a valley for the future. Think about it for a second. Swing high is here, moves down, comes back up, creates a valley, right? But when you break over that peak, that is when that valley is created. So it's kind of this interesting way to look at a level from the past that was once support, but now is broken, and it has moved past that moment to create either a valley or a peak. Of course, a valley on the top side, or a peak on the bottom side if you break it that way. So now you're going to ask me, well, Cotton, that's great, but how do I actually use one of these things in my charts? Okay, let's talk about that. When you create a valley or a peak, it is kind of like think of this as a combination support or a combination resistance. If you were to go above a level and create that as a valley, well, the top of that valley can actually be a level of support in the future. So on this side where you had created that valley, it can actually come and act as support in the future, and vice versa as a peak. If you were to break below and create a peak on your chart that looks like this, kind of this V shape, and you were to break underneath that, you would be coming back up to hit that as resistance. So these valleys and peaks, as they're created from the past of support, again, think of these as combination levels of strength. You can use them once those moments are created to find different levels in the future. Now, this is only the second type of level we've talked about. So we've talked about support and resistance, which we're going to categorize as one, and now valleys and peaks as number two. So this is just the second type of level you can add to your chart. Again, as we get more complex and deeper into this thing, you are going to find dozens and dozens and dozens of types of levels to mark, where if support and resistance is one type and a valley and peak is another type, that's your second type. You're going to be able to, in the future, add type 3, type 4, type 5, type 6, type 7 to this with no hassle at all. Now, this is great because we're adding the second part of our toolkit to support and resistance. In the Beginner's Course Remastered, we talked about marking swing highs and swing lows as levels of support and resistance. Now we're marking valleys or peaks as that same thing, support and resistance. They are the combination of events that create larger levels. So now we have a second type of support and resistance that we can add to our chart as we continue to build our toolkit to expand out into more and more levels on our chart that allow us to pick different moments or have choices in our charts. We are going to learn a lot more levels and a lot more types of support and resistance in future courses, but for now we're just focusing on the first advanced one, which of course is your valleys and peaks. So now let's go and mark out a few valleys and peaks so we can kind of all follow along together and see exactly what I'm talking about when I say valleys and peaks. We're going to look at the S&P 500 because that's what we did on the final lesson of the Beginner's Course Remastered. We're going to look at the S&P 500. So if you were to simply take your triangle tool, you could start marking out valleys and peaks. Now, the cool thing about this, as you're marking out your valleys and peaks, is that you can break down into lower time frames and you can start to see smaller valleys and smaller peaks that create smaller points of resistance and smaller points of support. And if you go into larger time frames, you can see the opposite. You can see the larger moments of support or the larger moments of resistance simply by just marking out these valleys and peaks. Now, one of the great things about a valley and peak is it's kind of the same thing as a wedge. It has two trends and a top side that form a wedge on your chart, but really what you're looking at is a valley or a peak. We don't really use wedges too much in day trading. Instead, we just use them as the top side and bottom side trend. But as a valley and peak, since we're marking kind of a flat top side or a flat bottom side, we will definitely be using these as moments of strength and weakness in our charts. One that I'd like to talk about in this video and point out is the S&P 500. In the last video we did of the Beginner's Course Remastered, you can see where I marked a monthly valley. Well, that ended up being the perfect support spot for your trade in the S&P 500 during the big crash that happened. So there was the big crash of the S&P 500 when the coronavirus first hit, and it back targeted a valley perfectly. Everything else had already been tested, and this was simply just the first one on your chart. So it became the perfect buying opportunity. It became the perfect spot to go and say, hey, this makes for a perfect bounce target. Hence, you have the big coronavirus sell-off that happened when the pandemic hit and the rebuy spot that everybody was kind of confused about. And nobody really understood, wait, why did this thing bounce here so hard and hold? Well, it's simply because there was a valley there that held up the price, an untested valley at that. So I think I said something very interesting just now, an untested valley or peak. If you think back to the Beginner's Course Remastered, we talked about untested levels. Now, untested levels are going to hit and they're going to have a move off of that untested level. Well, if what we're saying in the Advanced Course is a valley or a peak is nothing but a combination level, one of these more advanced levels that we can have on our chart, well, why can't that have a first test and a first touch on it? Well, it can, and this is exactly why the S&P 500 hit that perfect moment. The coronavirus hit, the pandemic created a big sell-off, economic crash, and it hit the perfect target, and everybody was kind of left scratching their head thinking, what happened here? Why did the move go so low, and why did it bounce off so hard? Well, it simply just tested the only untested valley on the chart on the largest time frame. So when you look at the S&P 500 and the big crash that happened, you simply just had to pull back to the appropriate level. There was no magic or hidden sauce there. It's just an untested level. So that's really interesting because now we can think of valleys and peaks as levels as well. And we can kind of start combining other theories on top of it to make this beautiful sandwich of day trading magic where you have an untested valley or peak, which is simply just pulled back to an untested level. So this was a great first lesson of the Advanced Course Remastered. You have been given a more complex tool to work with, and you can start to explore your charts in different time frames as you move up and down through them for these valleys and peaks. Interesting spots where you can see, hey, this has an untested valley on a low time frame. Well, that might be good for a low scalp trade, or hey, maybe there's a bigger time frame here and there's an untested valley or a untested peak. You can move through time frames and start marking out these valleys and peaks to see where some maybe interesting spots might happen, and always kind of check if they're tested or not, because that will give you a clear indication of, hey, can this target hold or bounce or not? In the next lesson of the Advanced Course Remastered, we're going to be looking at fractal information. This is another advanced way that we can tear down and look at different time frames. Think of time frames from the Beginner's Course, but now adding some more of these complex things that we've learned to apply them to those charts. I'll see you on the next video where we fractally break down deeper information to mark even better levels.